No rate hike. That's the takeaway from the Federal Reserve's April statement released moments ago. Let's bring in Nick Colas, the chief market strategist at ConvergeX, for more on this. So Nick, no one was expecting a rate hike this time around, but some were expecting the Fed to add back that balance of risks language to its statement, which had been in previous statements. They didn't do that this time around. What does that tell you?
You know, it tells me that they seem to be trying to get back to normalizing interest rates, or at least creating a narrative that the economy is strong enough to do so. That very much reads in the top paragraph of this statement, where they talk about how good the labor market is, for example. So it does seem like they haven't abandoned normalization entirely, and they're trying to reintroduce the concept here.
And just remind our viewers why balance of risks, why that was so important, that was so closely watched.
You know, it was one of those catchphrases the Fed used to explain that they viewed the risks and rewards of a rate increase as kind of fairly balanced and didn't want to push things over and risk an economic contraction. So that's why it was an important statement.
But the Fed also playing it very carefully this time around, not necessarily pointing to a June rate hike, although many investors think that is the next time we'll see a rate hike.
Yeah, it's fascinating. There's a real dichotomy between what the markets are telling us and what a lot of investors and economists believe to be the case. The markets are saying no better than a 20-25% chance of an increase in June, where I think most economists are pretty set on the notion that that is the next time we're going to see rates go up.
Although when you look at the economic landscape, right, we've got core PCE at 1.7% over the past 12 months. That's close to the Fed's 2% target. We've got core CPI at 2.2%. We've got job growth north of 200,000. Oil is back near $45 a barrel. Doesn't that scream rate hike?
It really does. It feels like those are the right things to look at, and the Fed has told us those are the right indicators, and that inflation number even takes into account this big drop in oil that we've had. And to get core PCE up close to 2% really does show there is some reasonable inflation in the pipeline.
All right, now looking forward, does this report, does this statement give you any indication of what we'll see in Thursday's GDP report and next Friday's jobs report?
Yeah, it's a really important point, because obviously the Fed has a pretty good idea of what tomorrow's number is, and probably next Friday as well. And this statement seems to say that GDP is going to be a little better than expected. Folks are worrying about a 0 or 1% kind of number. And that next Friday's jobs number is also pretty solid, maybe 200,000 or better.
All right, and in terms of dissent, the only Fed member not voting for this measure was Kansas City Fed Governor Esther George. She did the same thing back in March. What does that tell you?
You know, it's very important, I think, for the Federal Reserve to show that there is a lively debate and there's a conversation inside this room where all voices are being heard. And I think this is a signal that there is a camp inside of this committee that does want to go sooner. And it's important to verbalize that and show that it's a deliberative body.
All right, and is there a trading play on this, or is it more of a wait-and-see type of attitude as we look ahead to the June meeting?
You know, so little was expected out of this meeting, and complacency is so high, volatility is so low, that I wouldn't be surprised to see some volatility with folks looking at this statement and saying, well, we might get a rate increase a little bit sooner, and that could inject a little volatility into the market.
All right, and of course, we'll also be watching the dollar and the Bank of Japan's meeting, which comes out tonight and tomorrow.
Yeah,
Nick Colas from ConvergeX, thanks so much for coming by.
Thank you.
I'm Scott Gamm, and you're watching The Street.